The debt just seems to me a really big elephant in the China tea shop, and even Trump or anyone else, I think, will have a difficult time lowering the debt and the deficit, especially with where bond yields are and interest rates, and the fact that you could see inflationary pressures. And we're seeing, Andy, that China is reacting to this, the talk of tariffs and maybe even sanctions.
This is Little by Little with Andy Schechtman.
All right, everybody, welcome back to another episode of Little by Little. I am very happy to welcome my good buddy Mario Innecco from Innecco64 on YouTube into the house. Mario, how are you, brother? It's great to see you.
I'm doing well, Andy. It's great to see you too.
What's going on in the UK? All good?
Yeah, pretty gray and cold and drizzly. So with that, I'm looking forward to coming and playing some golf with you in January.
Oh, you said it. That's nice. That's wonderful. I can't wait for you to come here too, Mario. I've been waiting to play golf with you and do a live stream with you in person. You're one of the good guys, Mario. And it's an honor to call you a friend, and I can't wait to break bread with you and play some golf. Let's jump right into it. There's a lot to talk about. I think it's important, especially for people who are on YouTube, who are disseminating wisdom the way that you do to the public. If the public get to know you a little bit better, and I always try to do a little bit of research above and beyond what I already know to be true. And from what I can gather, you started your career working for a private bank in Geneva, Switzerland. And later joined Cantor Fitzgerald International in the UK. So I'll ask you the obvious. What lessons from this journey do you continue to take with you? What influenced your perspective on trading and on market analysis from your beginnings working at a private bank in Switzerland and with Cantor Fitzgerald in the UK?
Well, before I started my first job in Switzerland, I went to meet a broker who was a friend of my dad, and he took me to his office, and there was loads of other brokers there, and he showed me a screen, the Reuters screen or futures screen, and he said, "Oh, this is the coffee contract," and I never heard about futures, and he told me you can buy an option on coffee, and all you have to do is pay a certain amount, and you could make loads of money, and that really interested me. And I thought to myself, I'd like to be able to trade all these futures. And then at the private bank, I learned not just about futures, but about all asset classes, because we used to trade everything for the customers, from foreign exchange to bonds, to stocks, to options. So it gave me a really good basis to go further. And they were also mostly involved in government bonds and bond market. So that was what I focused on. And when I went to work at Cantor Fitzgerald International, I went to work on a bond desk as well, and doing U.S. Treasuries and Euro bonds, and all other kind of government bonds. They were cash bonds, like not futures. But eventually, I moved to the futures market. I left Cantor, and it's ironic that my career ended in 2012, and the company I worked for was bought out by Cantor. And which is strange. So I started at Cantor, finished at Cantor. But when I started out, I didn't think about gold or silver and the monetary system. All I wanted to do is learn about trading and technical analysis, fundamentals. That's the thing that drove me. And I try to talk to my clients, and pretty much like I do on my channel, try to tell them what's going on and what I think. But always telling them that they had to decide for themselves. Even then, I wasn't like trying to push trades to them. So that's what I learned. Give them what you think and what's happening. And the other thing that helped me, Andy, was that I spoke a lot of languages. My mother tongue is Portuguese. I speak English, French, Italian, and a bit of German. So that helped me in the business. So I had clients from all over the world, and I always try to keep an open mind. So I think that helps as well with the channel, because I'm not biased to any cultures or anything like that. So that's how it was. And then after 2012, I tried to get back into the city, but then I decided to start my own business, which was a pawnbroking business, a franchise. That didn't really go that well, and then eventually I had to regroup. I was at the bottom, in my chart, the Monaco 54 chart, and I decided to start talking about things on YouTube in late 2015, and that's how it started. I didn't say, oh, by 2024, I want to do this and this. I just kept going. So, and of course, I focus a lot more on what money is, gold and silver. That came from studying the Austrian School of Economics, because in the late 90s, early 2000s, there's a lot that you could find on the internet. And I've always been a person that, especially after I started working and paying a lot of tax, I wonder, why do I have to pay these guys who are so incompetent to run my life? So I've always had that attitude. And I think the gold sector, people are a lot like that.
Yeah, certainly you'll find most people who embrace hard assets like gold ascribe to the Austrian School of Economics rather than to what appears to be the failed Keynesian experiment. Speaking of, I just saw a story that came across my computer that said the Bank of England will hide identities of any pension funds or insurers or hedge funds bailed out under a new financial stability tool. Here again, you think that these folks would understand more of an Austrian perspective. They keep going down the same Keynesian failed experiment rabbit hole. What's your thought on that, just as an aside?
Yeah, it's interesting because a couple of weeks ago, I went into the city to meet with Oliver Temple from Gold Investments. I go there maybe once a month to have a chat. And I walked by the Bank of England because it's pretty close to the Bank of England. And I noticed that Threadneedle Street now is blocked to traffic. And I thought to myself, they must be worried.
You'd think.
Yeah. So they bailed out the City of London in 08, 09. Bank of England with the government, just like the Fed did. And they haven't learned, and they haven't punished the bad actors. So for them to come out and say they're going to hide the identity, it means that they're worried about it as well. And I think the same guy, he's the deputy governor, Ramsden, he also said that he's concerned about the hedge funds and how leveraged they are in the gilt market. And I think the reason they want to hide the identity is that people are waking up to it. And if they bail these guys out again, there will be a lot of anger. So I think it's wrong. Because when they make money and they do really well, they keep all the profits. And I would say a lot of these shadow institutions, they are based in the UK, but they are domiciled offshore, so they don't even pay much tax. And then when they lose, they expect the taxpayer to bail them out, because that's what a bailout is. So I think it's completely wrong. And it just goes to show, Andy, that they're not looking after the interest of the public and the currency. And why do I say currency? Well, because they'll have to print more and more. And that's why gold will probably go a lot higher. Not probably, I think in 5-10 years' time, it will be a lot higher. It's not just making new highs in dollars, but also in pounds, euros, all fiat currencies.
So I was going to ask you this question a little bit later on, but since you brought it up, rising price of gold, there's been a lot of talk, Mario, from the head of the Dutch National Bank, from Senator Cynthia Lummis from Wyoming, both advocating for revaluing the country's gold supply. Ironically, as you probably know, gold is held on central bank balance sheets in an account appropriately, and you can't make it up category, held in an account called the gold revaluation account. Do you think that this will happen? And if so, are there unintended consequences to such a revaluation, i.e. enriching the folks in the East? You know, China supposedly only has 2,500 metric tons or so of gold. We know that's a lie. They've been producing 500 or 600 metric tons of gold in and of itself for the last 20 plus years, let alone being the largest importer in the world. You think we'll see gold revaluation, and are there unintended consequences of such an action that you see?
Yeah, I think the U.S. Treasury and the Fed, they've kept gold at the statutory rate of $42.22 since, I think, 1973. After Nixon suspended the convertibility of the dollar or closed the gold window, gold was fixed at 35, then they raised it to 38 and then 42.22, and they've left it there ever since. And people wonder, why do they do that? Well, I think Jim Rickards said once they do it to basically denigrate gold, to say that it doesn't matter what the gold price is. You know, we just leave it at 42.22. I think it's worth about $11 billion on the Fed's balance sheet, the certificates. So if they revalue and they revalue to even 3,000, I think gold will explode higher, because it will be an admission that the fiat dollar has failed. I think the ECB, they keep gold on the balance sheet at the market price. So I don't know about the Dutch central bank, but I think, yeah, if they change the statutory rate in the U.S., and that has to go through Congress, I think, it would be huge.
I was told, or at least I read, that Janet Yellen could arbitrarily just instruct Jerome Powell to revalue the gold without congressional approval. I should dig deeper into that, but I'm pretty sure that's correct. Now you can...
No, if you looked into it, yeah.
I'm pretty sure she doesn't have to have congressional approval to do that. And it's funny you have Cynthia Lummis, the senator, who's advocating for this in the light of using partial or some of the proceeds to buy Bitcoin for a strategic Bitcoin account. Whether or not that happens, I guess we shall see. But I think it's interesting that, you know, there's been a lot of talk about it. James Rickards is saying you take M1 and divide it by the amount of gold we supposedly have, the 8,300 metric tons. And I say supposedly because it hasn't been audited since 53, but he comes up with $27,000 an ounce. And his comment is that every $4,000 increase in the price of gold gives the Treasury General account $1 trillion free and clear in terms of what it would do to reliquify the balance sheet. Thoughts, I think to keep in mind as we move forward. Certainly, the gentleman that writes for Money Metals, Neuenhaus, I think is his last name, something to that extent. He talks about all of the gold that has been redistributed across the entire European central bank ecosystem is all very similar in amount in terms of gold related to GDP, and in other words, saying that they are preparing for a gold standard of some sort. So certainly it would behoove all of the central banks to revalue gold. Something to think about. I try and keep my eye on that. Shifting gears just a little bit, my man, what are your thoughts on Trump, the new administration, and maybe even the market euphoria we see surrounding it? Anything come to mind?
Yeah, I think it's a little bit overdone. Maybe there is like buy the rumor, even though it's not a rumor that he won, but it's kind of the same reaction. Buy the rumor, sell the fact. The fact would be January 20th. So I'm not, and yes, there's a lot of good policies that they're talking about. But as I told you before we came on, there's even speculation that they might put tariffs on gold and silver, and yeah, that would be good for the price of gold in dollars. And but it just goes to show that tariffs could, in the short term, drive prices higher, and the yeah, and I think Trump's policies could be inflationary as well. I don't think he talks about bringing inflation down. I mean, we saw CPI is around 2.7. It came out today. But even if you bring it down to 2%, we still devaluing the currency. And uh, Trump, up until 2019, he was running pretty big deficits already, like 5% of GDP, 2019, and then 2020, 21. I know there was that that event that I don't want to say the whole name, but we went to 15% deficit to GDP. So Trump he likes that, and he likes spending. Um, I think he'll probably do things that will help the economy, but the debt just seems to me a really big, elephant in the China tea shop, and even Trump or anyone else, I think, will have a difficult time lowering the debt and the deficit, especially with where bond yields are and interest rates, and the fact that you could see inflationary pressures. And we're seeing, Andy, that China is reacting to this, the talk of tariffs and maybe even sanctions, by coming out with announcing that they're going to cut monetary policy. They're going to be moderately loose for the first time since 2010. They're increasing fiscal policy. So China is trying to inflate and to try to weaken their currency in order to fight that. So I think, yeah, it's still touch and go. I'm not too sure. We're going to have to wait and see. And yeah, I think, as I said, it's there's a bit too much euphoria, and things might change in the next few months.
I agree very much so. It's a period of fluidity for sure. Read an article, Mario, just the other day that the share of global gold reserves not stored at the Federal Reserve Bank in New York and the Bank of England has reached 78%. Another way of saying that is only 22% of the central bank gold is held at one of these two locations. Gold always held at the Bank of England to give access to the LBMA and at the New York Fed to give access to the COMEX, the two primary trading hubs. With the central banks accumulating gold at a massive level, in fact, their numbers I just read today are up at a level of, bear with me 1 second, I thought it was worth mentioning, that their numbers are up substantially over the last 12 months, but I want to give you the exact number if I can find it. I may not be able to. They have resumed. Oh, here we go. October tally doubled that of the 12-month average with year-to-date purchases. And, India, Poland, Turkey, Kazakhstan, and China are purchasing a tremendous amount of gold. Anyways, what I'm getting at is that with all of this happening, with the central banks accumulating and repatriating their gold, as we mentioned, only 22% being held at these hubs, way, way down, do you see a potential shift towards a gold-backed system, maybe integrating it with blockchain technology? Is this something that you think the central banks are preparing for?
Well, I think what they want to do first, because the concentration of gold in New York and London, that the reason why it was such a big concentration 50 years ago is because of the gold standard in the 19th century, early 20th century, and Britain ran that, and it was the empire. So a lot of the business flowed through London, so it had the tradition. And then New York and the U.S. Stepped up to the plate after World War II. So I think what it shows is that, yeah, the world's moving away from the Anglo-American axis, and they've seen that a lot of times you can't really get your gold. For example, Germany, they asked for their gold to be repatriated from the New York Fed. Part of it, I think, not all, and it took like 4 years to get that gold back. We've seen that Venezuela asked for the last gold they have at the Bank of England, and they won't release that. And yeah, so and also with 2022, what happened? Russia, Ukraine, they froze all the Russian assets, and so that's how I see that. As to the question about cryptocurrencies or blockchain, I'm sorry, that's possible. I guess the blockchain would be a good way to have a gold standard between the countries of the world, because it would keep them honest. Because it was supposed to be an open ledger, but I don't think it will be open to the public. But it will be open to the central banks of the world and treasuries, and they can see who has how much. If a certain country starts printing too much money, doesn't have enough gold to back the money supply, the people can sell that currency, and the interest rates will rise there, and then people will put gold back to work in there. That's how it would work. So yeah, it's possible, but it's only speculation. But I still think they want to have gold as a reserve if they're gonna also not hold as many treasuries as a reserve asset. So that's the other thing as well.
Yeah, kind of there's a fine line between conspiracy and reality. And the longer you do what we do, you start to question everything. We all know that China has such a vast amount more gold than they claim to. It makes me wonder about this new deposit they found, supposedly the largest gold find ever. I mean, what better way for them to say to the world, no, actually, we have all of this gold, and it's due to this find we found a few years ago. Now, we don't really only have 2,600 metric tons. We have 46,000 metric tons, or whatever the number is. Alistair McLeod, from your neck of the woods, would tell you 2 years ago that they had 38,000 metric tons, 20 by the state and 18 by the people. Probably a lot more now. And now they claim that they found this big find, which hasn't really been substantiated by the West, other than what the Chinese are telling us. It to me, kind of is a convenient way to, a year or two from now, say, yeah, we have found so much gold that we have a whole lot more than we've been reporting. I don't know. But sticking on the BRICS, the theme of BRICS, the theme of tariffs, and the theme of Trump, what do you make of his threats of 100% tariffs on the BRICS nations? And as an aside, do you really believe they're tariffs, or is it just a sanction masquerading as a tariff? Because indeed, what are they protecting? What manufacturing base are they protecting by making these threats? It seems to me more of financial warfare. What are your thoughts?
Yeah, some people have argued that it's just a negotiating ploy. You start, with 100%, and then you get to sit down and talk about things. Yeah, and like you said, what manufacturing you're gonna protect? Even though the United States, I saw the other day, still manufactures 16% of the total world's manufacturing, but China is more like up at 30%. So yeah, I think it doesn't help. It doesn't help the relationship amongst nations. I mean, if you're so aggressive like that, but that's his way of doing things. And I think maybe China and the other countries, they realize that. And yeah, maybe there will be tariffs. Maybe it will be 10% instead of 100. Or maybe, Andy, I've read a book that you probably heard about by Judy Shelton, Good as Gold. And she said the only reason you really need tariffs is because the currencies of different countries they cheat, under a fiat currency system. They print more, they devalue the currency so they can sell things cheaper. But I think the way to go about ending tariffs and having fair trade would be to fix the monetary system around the world. But that's really hard. I mean, it's really difficult to keep every country, every nation honest about its money supply and how much it's backed. So yeah, I think he's just trying to position the U.S. But at the same time, some people argue the U.S. has been able to do as well as it has or at least, corporate America and the deep state. They've been able to spend and do whatever they want because the U.S. could, they can print and countries are, they want to sell things to the U.S. because they need the dollars. So that's the flip side is if you stop countries from dealing with America, they won't need dollars either. They'll try to use some other currencies, and that's going to hurt the dollar, and that's going to hurt that exorbitant privilege that America has had since the end of World War II. So it's not as clear cut, but I guess, understand what he's trying to do. We'll have to wait and see how it really develops.
Yeah, we will. I'm looking forward to sitting down with you at the bottle of wine and digging deep into this kind of stuff. Maybe we'll do it in the form of a live stream, and we'll call a cocktail hour with Andy and Mario this winter when you come down. Just a couple more questions for you, Mario. Do you believe a global currency reset is inevitable? And if so, why do you think the public is not being warned about this at all, or its possible potential consequences?
Well, I think the rising price of gold is already like a de facto reset, but there could be like a weekend where the powers that be from major countries like U.S., China, Russia, EU decide to reset the price of gold and much higher, so that they can reliquify the system. That might come after a major crisis, or they might just keep doing it gradually as they're doing it. In my opinion, that the reason the public isn't told about it is because it doesn't work if you tell the public, because you want them to be left holding the bag, which is, I agree, it's not a nice thing. But people in power, they want to have the power, and they don't want people like us, the little people, front running them. And that's why I think there's always so many stories trying to denigrate gold and silver. They came out the other day saying that El Salvador has $3 trillion worth of gold. They said that about Uganda last year, 13 trillion. And the same story about China. I think it's all just trying to keep people away from protecting themselves with gold. So that's why they don't talk about it. Sometimes you hear people like the Dutch central banker, I think it was last year, saying that in a crisis we'd have to revalue it. But how many people do you think read that, Andy? It's only people who follow us who do. And if you try to explain that to people, they're not interested. And most people think that gold is really risky and volatile.
Yeah, they keep the important information hidden. It's like the First National Bank of Lindsay, Oklahoma, which I would argue is the first bail-in the United States. And we added 14,000 clients in 45 days when Silicon and Signature failed, and everybody knew about it. They were bailed out illegally, according to the Dodd-Frank Act. Bank of Lindsay, Oklahoma was just bailed in a few weeks ago, and nobody knows about it. But is it a trial balloon? They can say, well, what do you mean? It's on the FDIC website. You're not watching that? And if you Google it, there's just like one or two little brief stories, one by a local Fox affiliate channel in Lindsay, that are talking about, though it's out there, but it's out there in such a diminutive way. No one knows what bail-ins are. And that's the crazy thing about these important things that more people should know about. They drop some crumbs, and if you're astute enough to pick up on the scent and are on the trail, yeah, maybe you're okay, but it gives them the ability to drop these bombs and say, what? We told you. It was out there. Not our fault that you're not paying attention. But I find the things that you and I talk about, Mario, we still are the distinct minority, and hopefully that will change. They all laughed at Noah and told him he was a fool, and yet the flood did come. I'm not saying we're Noah or prophetic, But I do think if you pay attention to the crumbs that have been dropped at our feet, it becomes much easier to see a pattern. So with all of that being said, that the public would be the ones holding the bag, if you're not paying attention. Certainly you do. And it's easy for me to say these things as the owner of a precious metals company. I have tried in the 5,000 YouTube videos I've done over the last almost 4.5 years to distance myself in my mentality and the things I talk about, whether it be the BRICS, whether it be gold's reclassification as tier 1, whether it be bank bail-ins, whatever it is that I've talked about. I try to distance myself from that reality and try to be impartial as it pertains to giving advice about, where to deploy your money and how to look at the world. Not always successfully, but I try my best. So with that being said, coming from a man like yourself who has a career in all forms of traditional finance, futures, options, commodities, bonds, currencies, someone who doesn't own a precious metals company but understands their virtues, if you could give one key piece of advice for individuals navigating this very uncertain landscape, what would it be?
Well, what I've learned about gold and silver in physical form is that it's outside the system. And I'm not saying you should get out of the system. And by that, I mean the financial markets, stock markets, bond markets, and money market funds, but have some insurance outside the system because there's no counterparty risk with gold and silver. You're holding it. And I think if you read about the Great Depression in the early 30s, it wasn't because of the stock market that people lost a lot of money. It was because so many banks failed and people's money just disappeared and they had nothing. And but if they'd had some gold coins, they would have been okay, and silver as well.
So that to me is what I've been trying to say for a long time too. And I suppose there's a certain percentage of the people who say, yeah, but you're talking your book. So it's nice to hear it coming from someone like yourself who has no dog in the fight. I appreciate that. Mario, for people, and I want it to be known that you're one of my go-to. I mean, I watch just about everything you put out. I was in the process of watching your year-end interview this morning, which was a long one for you, over an hour, and I wasn't able to finish it. But I try and watch just about everything you put out. And for those folks who would like to follow you and find out more about what you're doing, what's the best way for people to do that?
Yes, it's on YouTube at Innecco64. That's Maneco 64. And I'm also on X or Twitter. Fairly active there at Innecco 1964.
Is that your birth year, I take it?
Yeah.
All right. Well, you're looking pretty good for a guy that is 60 years old. When's your birthday?
It was in October.
Ah, well, happy belated birthday. Well, I'll have a special present waiting for you when you get here in town, and we will do a live stream. My father wants to do one with you too, and that ought to be interesting. He's the Miles Franklin, his best friend, who lent us $60,000 to start this company in 1989 on a wing and a prayer before the internet. His middle name was Franklin, so he keeps asking me, when's Innecco coming? When's Innecco coming? So I'll look forward to doing that, and maybe we'll even do something from the golf course and make it fun. But
that could be good.
Mario, you're a good man, brother, and I thank you very much for coming on. I look forward to hanging out with you in person and picking up where we left off. I wish you and your family not only a very Merry Christmas, but a very happy and healthy New Year. And that goes for your puppy in the background there as well. Well, I got mine under my seat here. So this is our newest edition. We now have 3. And the poor girl has yet to officially been given a name. My wife likes Amila. I'm not so certain I love that, but with the other 2, I've had very little to say in it. But she is just a little peanut, and she's very sweet. Anyway, she says goodbye too, and I hope you have a good rest of your day, my man. Look forward to chatting with you soon, and thanks for coming on, buddy.
Oh, you're welcome. Anytime, Andy. Take care.
You too, my man.
Little by Little with Andy Schechtman.